Good evening. Here's what's making headlines in the world of business and finance. Worries over China's flagging economy continue to intensify. New data showed industrial output in July rose just 5.7% year-on-year, its slowest pace since last November, significantly weaker than June's 6.8%. Retail sales also disappointed, increasing only 3.7% compared to 4.8% in the prior month. On top of that, property markets showed further weakness, with home prices in major cities continuing their slide. Chinese officials have lashed out at local governments and firms for causing overproduction, which they claim is driving a deflationary drag. Beijing is now attempting to steer the economy away from manufacturing dependence by encouraging consumer demand, introducing loan subsidies, tax cuts for families, and trade-in incentives. Meanwhile, President Trump has extended a truce on steep tariffs against Chinese goods by another 90 days, offering temporary relief. But analysts warn that manufacturers exploring a Southeast Asia shift are now hindered due to Trump's broader tariffs on the region's exports. China's threat to restrict rare earth exports, crucial to sectors like EVs and electronics, is a potent card it's playing in trade talks with Washington. In Europe, France's long-term borrowing costs have nearly converged with Italy's for the first time since the 2008 financial crisis. Investors are growing jittery over French debt, particularly in the context of recent budget overruns and political instability that have rattled markets. Over in the UK, latest figures show the economy grew 0.3% in Q2, helped slightly by services output. That's slower than Q1's 0.7% rise, but still better than analysts expected. Policymakers were also relieved that fears of a mass exodus of wealthy, non-dom residents or the family farm sector selling off due to inheritance tax changes haven't materialized. Shifting to the United States, the effects of Trump's tariff war are increasingly visible in inflation indicators. Wholesale prices jumped 3.3% annually in July, underscoring that import duties are beginning to ripple through to consumers. Despite rising prices, U.S. consumer spending remains robust, which economists say may delay any central bank rate cuts. In corporate news, the AI boom is reshaping business dynamics. Apple supplier Foxconn now reports more earnings from server systems than smartphone manufacturing, as data infrastructure spending surpasses $3 trillion globally. However, China's Huawei continues to face challenges. Its domestic AI firm DeepSeek had to delay an upcoming model after struggling to train the system on Huawei-made chips, spotlighting Beijing's uphill road in replacing U.S. tech. In the crypto space, a venture linked to Donald Trump's sons has begun acquiring businesses in Asia to build Bitcoin reserves. Bitcoin itself reached fresh record highs this week, buoyed by corporate adoption and policy signals from Washington seen as favorable to crypto. Meanwhile, energy markets are under pressure. U.S. shale drillers are holding back on investment and mothballing rigs as oil prices slump due to OPEC output increases. That could substantially reduce U.S. production in the coming months. One symbolic note from Westminster: Britain's Palace of Westminster unveiled a new £10 million entrance as part of its £10 billion refurbishment. Only one problem: it doesn't work properly, drawing fresh scrutiny over public spending. And finally, in science, a breakthrough from California. Researchers have developed a brain implant that decodes and vocalizes imagined words, potentially transformative for people suffering from paralysis. This report is based on updates from the Financial Times, Bloomberg, Reuters, The Guardian, CNN, and CNBC.